Hello, everyone. Welcome to the Journey to DevelopHer Podcast. Today, I have a special guest, one of my good friends in real estate. His name is Jonathan Soto. Hi, Jonathan. How are you?
I'm good. I'm doing well. And yourself? Thank you for having me. It was a pleasure.
Thanks for coming on. I definitely said, you know what? I have to have Jonathan on here. He is a mortgage loan officer in the New Jersey area. He's definitely an expert in our market where we live, where I live. Some of my viewers, just they're across the United States and in other countries, but we needed an expert to come on here and talk about financing, okay? Because there's no way people could buy real estate without their financing in line. I had to bring you on here. Tell us a little bit about, for one, I don't know if you want to tell us the name of your company,
Mhm.
what you do as a loan officer. Feel free to
Yeah,
let us know.
definitely. Right now, I'm a loan officer for MLB Residential Lending. We're based out of Union, New Jersey. We have branches all over the state of New Jersey itself. I mainly focus in the Essex and Union County area, but I can loan in any part of New Jersey. My prime focus right now is first-time home buyers. I want to spread the word how accessible and feasible it is for a lot of people to purchase their first home, fire their landlord, even become their own landlord to help them build generational wealth. I just want to continue to spread the knowledge and help people that they think it's not attainable, but it's definitely obtainable. If you aren't ready right now, I can give you that guideline process and stepping stones to get ready.
Awesome. Let's get into it. What are some of the steps for your average buyer to purchase their home from? And I want to say probably from start to finish. You don't have to go into it all the way. But what are some of the initial steps one would have to take to purchase their first home?
I like to break it down to three categories. Number one is income. Of course, the more you make, the more you qualify, but as debt comes into place. If you have more debt, you qualify for less. Depending on that ratio, the rest of it will basically go to your mortgage payments. That's the very first one. You have to be employed for 2 years to utilize FHA. If you're a W-2 employer, you have to be at your job or consecutive jobs for at least 2 years in order to utilize FHA. The good thing about that is if you just graduated school and you started your job, you can actually buy a home. We can use that school education as 2 years work history.
Really?
So
I didn't know that.
that is correct. Yeah,
Good.
that's income. Income's number one. Number two, credit. The minimum right now is 620 for FHA. If you're not at that minimum 620, I can help you. I have systems in place to help you do a credit simulator to tell you exactly what you need to do in order to get to that 620. And there's a lot of people that do credit repair. If you have anyone familiar with that, you can definitely go that route as well. But number one thing is you cannot have a dispute on your credit before buying a house. That dispute has to be resolved. So,
I totally agree. They look at that as a negative remark.
yep, that is correct. That's the credit part. And for the credit score, we look at the middle score. If you have one score under the 620, you're fine.
Okay.
As long as the middle score is above the 620. The third one are assets, basically meaning cash. How much cash you have on hand for down payment and closing costs.
Right.
For an FHA loan, first-time homebuyers, you can put as little as 3.5% down. Just put numbers into perspective. Let's say you're buying a house for 300,000. That down payment will be 10,500. The good thing about FHA is you can get a gift from someone, a relative or close friend, then give you that down payment to buy your first house. You
Right.
can get it from a 401k. You can get it from your employer. Some employers actually give money for a first time. You can get the money from an employer. There's different ways you can get the money for a down payment. And for closing costs, those can vary depending on the city, the house, the taxes come into play, higher taxes, higher closing costs because of escrow.
Hmm.
That would depend. The good thing about that is you can add a seller's concession, which is basically adding the closing costs into the mortgage. There's definitely different ways you can maneuver to buy your first home. You just have to have that conversation with me so I can better guide you on how to move forward.
Awesome. Do you work closely with the down payment assistance programs, the cities and municipalities? Because I do know some lenders, they don't have the expertise with down payment assistance. Are you skilled?
So right now, no, we're not working closely with those. Before in the past we were, but as of right now, we are not. But we're in the process of trying to bring it back very soon.
Okay, cool. And what about, I know they had a program over the last couple of months because of COVID. They were assisting first responders with purchasing homes during this time. Do you have any programs or incentives for first responders at this point?
Yes, correct. We have incentives for first responders. We basically give them a credit to lower their closing costs so they can come less out of pocket.
What are some things, how does one know how much mortgage they can afford? And well, do you recommend that they come in with what they can afford, their affordability in their mind, and then you say, okay, you can actually afford it? Or do you tell them based on their income what they can afford? Or should it be both?
There's definitely two ways. Depends on the person. A lot of people have a mortgage payment on their mind, like I don't want to pay above this mortgage, but 9 out of 10 times they usually pay more because they're actually owning real estate and they think they're still paying rent. Most of the times, a mortgage will be more than your rent because you have to remember there's a lot of benefits of owning real estate. Appreciation, number one, it goes up in value. You're paying down the equity with each mortgage payment. You're building equity. There's tax benefits. You're paying the interest and taxes. You can do a write-off at the end of the year.
Right.
A lot of people have a payment in mind, but sometimes that payment can be higher depending on the price range they are looking for, especially in certain parts of Jersey. Most of the times, I have a conversation on what you qualify for, the max, but of course, you don't have to utilize that. And then I reverse engineers, okay, what do you feel comfortable paying monthly? If they tell me what they feel comfortable with, I tell them, okay, you have to find a house within this price range and this amount of taxes. About, to put numbers into perspective, let's say a $350,000 house with 10K taxes, that's about $2,500 a month.
Okay.
With FHA, that's including the taxes, the insurance, the mortgage insurance for FHA, about $2,500.
Awesome. There are some no money down programs, of course. We have VA loans. We have USDA loans, which, I remember 2012 or so, when I was much younger, I was looking in rural areas. It wasn't even that far. Maybe it was 2013. I was looking at rural areas because I'm like, listen, I can move in this area with no money down. I can have a house. So how does one qualify for a USDA loan? And you can even talk about the VA loans.
Yeah, so the USDA loan, it all depends on the property, of course. There's certain criteria in the property that has to be more rural area. You'll be surprised. It doesn't have to be a farm. A lot of people think is you got to go to the farm, and that's the only way you could get a USDA loan. It just depends on the population and the area. Some towns and actually Morris County qualify for USDA. I was actually looking for USDA loan myself, but there's certain criteria that if you own prior homes, it's tougher to get USDA loans. So that got out the question. Yeah, USDA is typically on the house itself, and debt to income ratios are a little tighter. They're lower. If you qualify for a higher amount for FHA, you'll qualify for a lower amount for USDA.
Okay. And then, of course, with VA, you have to be a retired military veteran, right?
Mm-hmm.
And you could be current. You could be just enlisted. That is a great program and a great way to become a first-time home buyer.
Just to add a little more on the VA, 0% down, can't go wrong. Basically, you would need the same documentations for any other loan, and for VA, you would need the DD-214 and the COE, I believe it's called. Those two documentation that are extra that your loan officer will request to qualify you. And you can buy a multifamily with a VA loan. So,
can you do that with the USDA loans as well? No,
I don't think so. I do not. No, I don't think so.
Yeah, and I think I was reading at some point the last time I did a home buyer seminar. They were saying that, or I said maybe that the population had to be like under 15,000 or for the town, a very, it has to be a very small rural town. And I get a lot of questions about 203K loans because you have a lot of individuals who want to act like they're investors, right? They want to buy their first home, but they want to make it to their liking for their first home. And we know it can be a multi-unit and or a single unit. And I don't know if they do condos, but I'll let you talk about the 203K loans and that whole process.
Yes, the condos, 203K is a FHA loan. A lot of condos don't approve FHA. It would all depend on the condo itself, but there's renovation loans for conventional as well that we can touch base on. For 203K loan is basically you're buying a house. Let's say you're approved for 300, your pre-approval. You're buying a house for 200 and it needs $75,000 worth of work. You can actually buy the house and add the renovation into the mortgage for a total of 275. The main thing with 203Ks, you need a licensed contractor that knows how to do 203K loans. Because if you don't have that, it can be a nightmare of a transaction. The contractor itself has to provide a lot of paperwork for that. And if he's dragging his feet on that paperwork, he's going to delay your transaction.
Yeah. And
but if you have the proper team in place, like anything else, if you have a proper team in place, you're fine.
Yep, I agree. And what I see it's a struggle with, and especially in Essex County. I can't speak about the other areas in the country, but I know in Essex County, these contractors, I mean, they're worth every penny, but I see that they're not sticking within that budget. I'm like, well, and some of them don't even want to do 203K. Because we could go into a house as investors. I know you're an investor as well. And we could say, all right, this house needs 30 grand or it needs 75 grand. But what I'm seeing is these contractors are charging them retail prices, 150,000, and it's messing up the calculation.
Yeah, because 203K, it's usually a higher price for contract with 203Ks because of that paperwork and those hurdles they have to go through. And the contractor technically has to come out of pocket up front for most of the work, and then they get paid at the back end. And a lot of contractors don't like doing that. They like getting paid up front so they can actually buy some things and do the work and get paid as they go. Right. So that's one of the reasons why.
Right. Well, I think it protects the consumer, the borrower. Mm-hmm. There's a lot of contractors out there, conning people out their money. I think you got to be fair, right? And I've seen personally contractors just run off with people's money, and the license wasn't even a real license.
Yeah, I have actually bad story. I know someone did a 203K for a single family in Newark or North Newark, and he did probably 10K work and he basically disappeared. And the bad thing is, he was paid most of the work. The bad thing is, the bank she used, of course, it wasn't my bank. The bank she used recommended that contractor. That's a very sticky situation.
Wow.
Yeah.
You have to tell me off the air what bank was that. That's normally, you normally don't get that. That was probably an inside job, right? That's crazy.
I don't know. I would say always interview multiple people, of course. Look, I'm a firm believer if you're doing a good job, you should get paid what you're doing the job for. Exactly. But don't abuse people. Karma gets back to you. Do right by people, people will do right by you. You can't build a long-term business on screwing people over. It can only last so long.
Right. And in this business, everybody, especially in real estate as a whole, there's so many different moving parts, there's so many different businesses. And even, us being in the industry, you being a loan officer, I'm being a realtor, even if you refer me, let's say me and you were brother and sister, right? And we own a real estate company. Even if you were going to refer me, isn't there some type of form you have to, or disclosure you have to tell your client about? Like, all right, I own this amount in this company that I'm referring you to. In New
Yeah,
Jersey?
yeah, that's it's a law. If you own a certain percentage of the company, like let's say title or anything else, you would have to disclose that information. Correct.
Yep. And I think it's necessary because people, again, I hear all types of disaster stories in real estate, even from
I
title
know
companies,
it's horrible. It's
even
horrible.
from
You
title.
know?
Like at this point, even it's scary bringing people on the podcast because I feel like you're great, but like even like with hard money lenders and stuff like that, I don't really share who I work with personally because not everybody have the same experience that I have with the person. Even credit repair, I don't even think I'm going to bring any credit repair people here because you just never know with credit repair. Because what might have worked for your profile may not work for something else. But the great thing is with loan originators, you're actually hired by the state, right? And the bank. They're checking your profile. This is not 2009. You can't screw nobody over.
Oh no, there's a lot of
But
regulations were added because of that. The tests, the fingerprinting, background checks, all that, all the 9 yards to ensure that there's a lot of laws that were added because of that.
And thank God because the
Wild,
stuff that
wild,
was
wild west
happening.
days. Wild, wild west days. Yeah,
I
it was pretty
know.
insane. They were
I was in
so.
college.
So just for example, before there's a specific law that you can charge a borrower a certain amount of points. Before that regulation, they were charging 5, 6 points, and they don't let the borrower know until closing. The borrower was coming to closing like, what is all these fees? Either you want the house or you don't want the house. Now there's regulations to avoid that. You have to provide the closing disclosure 3 days before they can review it, and then when they come to closing, there's no surprises. That's a good, very good law because it was a wild, wild west days back in the days.
Right. And I even hear, it's not horror stories. The most I think loan officers could charge is what, 2 points now, right?
3 points.
Charge 3 points. Okay. But if you're getting paid, for instance, like I see loan officers, they're trying to make that 3 points. They don't care if it's FHA or whatever. They're still like, if they can make the money, they're going to make the money.
Yeah, a lot of loan officers don't get percentage. It's whatever kind of percentage they have with their bank. They're not getting, if they're charging 3 points, they're probably not getting the 3 points themselves. They're probably lowering your rate. You're paying points to lower your rate or get a better deal. So the loan officers wouldn't get the 3 points. And it depends on the percentage they have. It depends on the percentage they have with their bank, and that's how they get paid. It's different. It's different percentages compared to real estate. It's not the same as an agent.
Right. So but again, people out here trying the way you're saying it is the correct way to do it. If you are going to pay the extra points, you're buying down your interest rate.
That's the only way I would charge a point.
Right.
The only way.
As we know, Jonathan would be a preferred lender because the stuff I see on Instagram. Okay.
No, yeah. A few people that they show their closing disclosure. I'm like, why are you getting charged so many points? And that's the regular rate that's going on right now.
Yeah.
Yeah.
And especially with the interest, like you still have people paying interest. I had a client a couple of months ago. They had a 740 credit score. Not even a couple months. This was like 2 months ago, maybe.
Huh?
740 credit score, and their interest rate was 3.65. I'm like,
was it a renovation loan or was it a regular loan?
No, this was a regular loan for a first-time home buyer, and they were going with a big bank. I think that was Bank of America at the time.
That's one of the reasons. Those bigger banks usually have higher fees because on their end, you got to think of it. It's a big bank. They're not going to touch it unless they're making a certain amount of money on it. They usually have higher fees, higher rates, and things like that. Smaller banks, that's their bread and butter. They work with the inner city, with different communities and things like that, and they're able to. They don't have that high overhead and all those things. They can go the lower rate and help the clients because they're about the clients, not big corporations.
Exactly.
The number one thing I would recommend if you're a first-time home buyer, you never owned a home, buy a multifamily as your first home. That's how I started in real estate, and that's how I don't force people to go that route, but I always give that a suggestion. Because if you would like to buy a single family home first and then go buy an investment property, you would have to put 25% down. Let's put that into numbers. Let's say a house is 300K. 3.5% is 10,500. 25%, let's see, that is
Six.
what's that, 70, about
Yeah.
75K. It's a big difference, right? 10,500, 75K. If you have 75K in the bank, then go for it. That's a great solution. But the cash on cash return is a huge difference. You're putting $10,000 down on that same house, $75,000 down.
Mm-hmm.
It's a big difference on cash return. You're basically we recover the down payment faster, and you'll be able to profit faster if you buy a multifamily as your first home.
I agree. Always advise. I mean, I have a client right now that I think I even told you about. She's not getting it, but I'm trying to let her. She doesn't want to deal with tenants, and I understand that 'cause she's an older lady. But even if you're older, it doesn't even matter. Hire a property manager. Live in the house. They don't even have to know you're the owner. Just buy the house. It's only for 1 year. Make sure you're screening your tenants correctly, I must say. And at this rate, you should definitely be using a Section 8 tenant, okay? Like,
Yeah,
definitely recommend.
I love my Section 8 tenant. I can't complain.
Me either, okay? Even if they have a huge portion, what? The likelihood of them trying to get evicted for even when COVID is over, they still want to have their voucher. The likelihood of them not paying their portion is very slim versus, cash paying tenants that I don't even know what's happening in the world right now. They know they don't have to pay rent. They're just not paying rent. Some people aren't working. Some people have been furloughed, laid off. Some people
take advantage of people.
Right. And some people just didn't even receive unemployment. Like, I have a lot of friends that just never received it. It is what it is, right? Yeah, some people just going shopping. They balling out of control.
Yeah. And people that just don't want to be a landlord, like you mentioned, just hire a property manager. I actually manage some properties for my clients that I help them buy a house, get them the loan, and think of it as a business. Mm-hmm. You put the tenants you want. You don't have to force anybody in there. No one can force yourself into your apartment. You can vet them properly, background checks, pay stubs, put all that information. You can do the process slowly. You don't have to rush anybody in. If you rush somebody in, that will be a bad tenant.
And I would even say call their job, call their prior landlords.
Well, be careful with that because someone could just get their cousin's number.
You're right.
Yeah, but trust, then verify. Trust them, but do the verification to make sure.
And then you could just tell I work with clients all the time with different personalities, okay? Some people are super sweet, and then once you piss them off, they turn into the Incredible Hulk. We all know that. But make sure you're there, treat it like an interview. Look at what I hate to say look at what they're wearing, but look at everything. Like, especially you're living in the house with this person. It's not like it's an investment property. It is going to be your primary home. You're going to care if they're a smoker. You're going to care if, they're going to, I don't want to say nothing discriminatory, but you're going to care.
Yeah, be careful with discrimination laws on renting.
Yes, but when you are living in the house, you do have
more leeway.
Yeah, you can discriminate a little more. I'm not saying I'm against discrimination.
Yeah,
I'm like the fair housing advocate. Like, me personally, I've dedicated my real estate agent career to working with people that are discriminated with Section 8, with SOTA program, being homeless, etc. However, when you're living under one roof, you have the option of who's going to move in that house with you. And be selective. And sometimes you can't even go on someone's job because no one has job security right now. At any moment, that person can be out of work. You have to just, decide what works for you. But I think we both agree, Section 8 is never late, and you should go to Section 8 tenant.
Got paid. It was today's. I already got paid for that Section 8.
Me too. Mm-hmm. I got a Cash App the portion that my client, my tenant has, and then the other the check should be in the mail. I ain't go to the PO box yet, but either way,
do direct deposit.
So most of my investments are in Kansas City, Missouri. They're a little behind, but I did sign up for direct deposit. They just didn't do it back, but it's fine. I know it's gonna be there. And then I'm deciding now, my multifamily that I have in East Orange, whether or not I'm going to keep it. I still don't know. Let's talk about refinancing, because that has been like the biggest change since COVID that has hurt a lot of investors. People. Yeah. Mm-hmm. So, because, everybody's like, yeah, I'm going to do the BRRRR strategy. I'm going to buy it, rehab it, rent it, refinance. Right now, refinance, if you didn't purchase that property correctly at the 65% of the ARV, you're kind of screwed right now, right?
Yeah.
Yeah. Because or you come into the table.
You always make money on the buy. If you buy at the right price, you're good.
Exactly.
If you're going hard money route, if you're going FHA route, of course you can't buy that 65. You're buying more retail.
Right, but even with that, I was going to keep this property, even though I have an offer for $390 right now. I might probably just sell it, but
probably good time to punch out.
Right. So I was told, and I didn't know this until recently, that in order for you to get the 80% of the ARV or the LTV, you have to live there for 12 months. I'm like, I just bought the house in February. That's impossible. That wasn't going to work. And now a lot of the refinance banks or whatever, they're not doing 75%. They're only doing 70% of the ARV.
If it's is it an investment? I mean, it's a multi or single?
It's a multi. It's a 2-family with a bonus.
It will be 75. 3 families are 70.
Oh, okay. I'm gonna have to talk to you about my profile. And what's the credit score that you need?
Conventional, probably 660, 680.
Okay, I got it. Mine is like 7 something. Now, what are the points that they're charging too?
I don't charge no points.
Oh.
You're talking about residential, right? You're not talking about 5 units, 6 units, right?
No, yeah. Somebody tried to charge me like, I ain't gonna tell you how many points, and I was like, nah, I'm good. But
the only thing I would charge will be the commitment fee and the application fee, and that's regular for any loan.
Yeah, that's fine. That's fine. Now, what are you seeing with these appraisals? Because we were talking about this off the air, that the market is crazy right now. It's a seller's market. The houses are selling for $50,000 over asking, with multiple offers probably at that $50K over asking. Do you see most of these deals getting appraised at that amount once you go through the process with the buyer?
Yeah, a lot of clients, because they're eager to buy the house, they will go 50K over or 60K over asking. And a lot of appraisals are coming in lower because there's no other houses that sold in that area for that price range. A lot of deals are under appraising, and they have to go back to the drawing board and get to negotiation with the seller.
I'm glad you brought this up. We'll say East Orange. Have you had any deals in East Orange recently? New Jersey?
Yeah, but it appraised. It had no issues appraising.
So what are like 2 families with a bonus appraising for? I gotta ask, because we're about to do my.
Yeah, it would depend, because in certain sections in East Orange, there's this. It depends on the qualification, the bedrooms, the square footage, if it has central heat, central air. If it doesn't, it's a lot of things that come into play, like garage. If it has the bells and whistles, I don't see having an issue appraising for $390 if it's in a depending on which part of East Orange as well.
It's in the 18 parts off of South Orange Avenue to be exact.
Okay.
But it does have a huge driveway, like
okay.
Huge. We pretty much did everything over, I would say. It looks good. The siding is done. The roof is okay. We didn't do the roof because it was nothing wrong with the roof. It has a new boiler. We didn't do HVAC.
Okay.
But everything else is new.
How many bedrooms total?
7 bedrooms, 3 baths.
Okay. What type of flooring? How's the kitchen? Kitchen's
Kitchen,
renovated, bathrooms renovated?
everything is renovated. We didn't do hardware. We did a really good laminate.
Okay. Okay.
And then that bonus apartment definitely can be, well, it's already rented technically. I don't have anybody in it yet, but we have a
Gotcha.
person in there for like $1,200 ready to go.
Okay, so
So
it has a bathroom.
yeah, it does have a bathroom.
Oh yeah, then yeah, you could might be yeah, you probably could. If it's nice inside, then yeah, you probably could get that 390. It probably pays for that 390.
Nice, good to know. You're gonna work on my refinance
Okay.
situation.
Sounds
Definitely.
good.
Awesome. All right. Is there anything else that you want the audience to know about this market? Because again, a lot has changed since COVID. I don't even know what's next. I think nobody knows what's next. Only God knows what's next, right? We don't know what's happening with people not paying their mortgages. We know the landlords are not getting any protection, really. Not so much. I think there's a few grants that came out, but I don't know anybody that benefited from it just yet. Maybe the larger buildings, but not the
Sure.
smaller landlords. What do you think is going to happen in the next 12 months? Your prediction?
I would say the rates will stay the same or possibly go a little lower. I would say prices will continue to go up depending on corporation jobs. As soon as we see a huge layoffs from those bigger corporations, that's when there may be some type of stands hold, like a freeze, like on the prices for real estate. It may dip, it may stay there for a while, but I think those big corporation jobs play a big role. If those big corporations are hurting, then it can possibly impact the real estate market.
I agree. And I think we're in a great hub because New York
Mm-hmm.
City, everybody's fleeing to New Jersey. Okay.
Yep, that is correct.
I feel like the people that can't afford New York, they don't care because they're flocking into New Jersey anyway. They can still commute
Mm-hmm.
to the city in 30
Mm-hmm.
minutes. They're good. This is gold to them.
Yep.
Who's going to suffer is the people from New Jersey, like in Newark, that were trying
Mm-hmm.
to become homeowners. They can't afford it now. They're being priced out.
Yeah. Yeah, and the higher price listings will suffer definitely. Certain areas
Oh yeah,
won't probably be as impacted, but I'm pretty sure I believe it's already being impacted. Some
yeah, like
luxury.
Short Hills, like
Mm-hmm.
Livingston, and they already have high taxes. I think like the Montclairs are good because Montclair is a very poppin' town, great school district, of course, and then the train accessibility to New York is great. But anything past Montclair, maybe even Morris County is fine if you're staying under like 500 to 600,000 for a house, because they don't really have multifamilies out there. I don't even know who's buying single families for that. I mean, not my clients anyway, for 600,000. But I do feel like Essex County is in a great position.
Especially because close, as you mentioned, close to the city. A lot of people are going more south because the main focus for New Yorkers was like Bergen County area, but that's getting a little shift from what I'm seeing. A lot of more people are interested in Essex County and Union County. To be surprised, a lot of people like the Union County area because there's a lot of cities within Union County that are easy accessible to New York and have a pretty good, decent price range.
Yep, I agree. Awesome. Unfortunately, we will see people facing foreclosure. I don't know if your company deals with any type of mortgage relief. What are some of the options people have right now?
People that can pay for the forbearance, that's number one. If you really can't pay, I would say go in forbearance and to freeze your mortgage payments. But if you can pay, I would say continue paying and don't go into forbearance because a lot of clients are in forbearance. They still have their jobs. They still are collecting rent and things like that, and still got into forbearance and they want to refinance. You won't be able to refinance if you have that forbearance language in your credit. Be careful with that. Yeah, if you can't pay, try to go number one, forbearance, because you utilize that as long as that's there.
Right. How important is it to have Latino and Black representation in the mortgage industry?
Huge, huge, because a lot of people, especially Latinos, don't feel as comfortable with other individuals.
Mm-hmm.
They feel like, well, a lot of people take it because a lot of us get taken advantage of.
Right.
We need to help our people spread the word in order for home ownership is achievable. A lot of people just are stuck in the system and stuck paying rent every month and don't want to deal with the process of actually owning a home.
Mm-hmm.
But I want to spread that knowledge. It is feasible. It is doable. If you're not ready right now, the best thing you can do is speak to someone that's familiar with the process, for you can get ready in a year from now. Because you don't want to go a year down the road paying rent, and then you want to buy a house next year and you're not ready.
Right.
Start getting ready now. Maybe your credit needs to get fixed. You can work on that from now. You can understand how much down payment you would need, how much closing costs you would need. You don't want to go a year from now and basically you're starting fresh and you have to wait another year.
Mm-hmm. Mm-hmm. Yep. Oh, I think I have one more question.
Yeah.
Because, we're both entrepreneurs. And what we didn't talk about was other entrepreneurs that get 1099 income.
Self-employed. Yes.
Yeah. For self-employed individuals, they do qualify for mortgages, but
100%.
tell them what's the big but there.
The big but is we use what you pay taxes on. If you make 200K on your taxes, but you have 160 of expenses, you're only really making 40K to the banks. You're only paying taxes on 40K. The banks will use that 40K as your income, and you won't qualify for much. Be careful how you do your taxes. Do them properly, and if you do have properties you rent out, make sure you do your Schedule E properly, for it won't hurt you. If you have a negative on your Schedule E, that's like you have expenses slowing down your taxes. It would hurt you on qualifying for another property.
Awesome advice. And I figured let me bring that up because I've seen it personally where people were claiming they made 100,000, but they was claiming 15,000. I'm like, what are you buying?
Yeah. Basically, what I tell people is, you're trying to trick the organization you're trying to lend from. You're telling them, okay, you only pay taxes on 15K, and you want to turn around, give me a loan for 500,000 with only 3.5% down. That's not possible. You have to pay your taxes and then you get a loan.
Exactly. All right. Well, this was great. Thank you so much for coming on here today. It was great. As you know, you're my preferred lender. I try to give clients 3 lenders to choose from, but we're going to make you highly recommended. And we'll be in touch. And thanks for coming on. Have a blessed day.
Thank you for having me. And
tell everyone how they can stay in contact with you.
Yes. I have my Instagram is JonDoesRealEstate. That's JON does real estate. No caps, no special characters, no spaces, no underscores, anything like that. And my website for mortgage is jonathansoto.mlbmortgage.com. And you can apply online and you can reach out to me for further questions for a free consultation.
Awesome. All right. Well, goodbye for now, and we'll talk soon.